Hello and welcome to another edition of Crypto Claptrap by the True Options Masters. I'm Chris Cimarelli. We have Mike Burson here, our managing editor. Mike and I have both made six figures trading crypto, and we like to give you our thoughts on the crypto market from time to time so that you can hopefully make money in it too. Full disclosure, we're not financial professionals, but it didn't stop us from making money, and that's why we're here to talk to you, because chances are you're not a financial professional either, and our success should sound great to you because you don't have to know everything. You just have to know a few things to make money in this space. And I think we've got some exciting opportunities to talk about today.
I agree, Chris. I think what's been instrumental to a lot of our success in crypto has been patience. And it's very hard to preach patience at a time like now, but there are some weird things lurking under the surface which might spell some clarity and end to this downtrend potentially, not immediately, but in the coming weeks and months that we can look forward to. So if you're not into crypto yet, or you're in at higher prices, you might want to start considering averaging in at these levels after we talk to you today and after we show you what we're going to show you. So let's just jump right into it. Share my screen.
Yeah, I agree with you, Mike. I think we're seeing some promising things on the price charts. I know we're going to look at Bitcoin and Ethereum here. Yes. We're going to talk about another smart contract play. I think that
a few others,
I think is showing some promise. So
yes,
yeah, go ahead and kick it off. I can already see right here, we're seeing some nice support in Bitcoin, although it's getting tested.
So we're here on the weekly candles. This goes back to late 2020 when Bitcoin was having its major bull run. And we have this kind of very steadily rising parallel channel in the Bitcoin price on this weekly candlestick chart here. Now, we're right at the bottom of this area. So if we burst through here, and I'm not saying we can't, that would be fairly bearish. The moving average stack is not working in Bitcoin's favor. And I think worst case scenario, this chart isn't showing the prices, it's showing the market cap. I apologize for that. I think we could visit the 20 to 25 level in Bitcoin again. And if we do, I think that's where you want to be bidding really hard. Let's just look at the momentum indicators. You'll notice on these weekly timeframes, we're kind of neutral. We're looking pretty bearish on the MACD. I was spotting on the hourly timeframes. We have a little bit of a positive divergence setting up where you see rising momentum, a little more short term on the MACD with lower prices. So that does tend to signal bounces, especially as we're coming up against this really long-term support. So something you might want to pay attention to. Now, before we move on to the other coins, I want to just quickly introduce the Heiken Ashi candles again. If you follow my chart wrap videos on the channel, you know all about this. Heiken Ashi is really good at spotting uptrends and downtrends long-term in the Bitcoin price and in other cryptos. So it's been acting really funky lately. For those of you that don't know, downtrends are characterized by long wicks on the bottom, no wicks up top, and red candles. Uptrends, long wicks up top, no wicks on the bottom, and green candles. Trend change candles are when we get these Darth Maul style wicks with two long wicks on either side of a smaller candle, and that's usually confirmed by a candle in the opposite direction after the trend change. So this is when everyone was getting really excited and Bitcoin was coming up towards 45K again. But we trend changed back down, and it's just been a lot of choppy and sloppy action the past few weeks. So you can look at this a couple ways. One, you can look at it like this is bottoming action, and we are up against this very long-term support, and that we might start building a base here. Or it's just that the market's really indecisive. There's a lot of weird business going on between the war in Ukraine, surging commodity prices, regulatory clarity, which we're going to touch on all that in just a minute. But in terms of the long-term technicals for the crypto charts, I really want you to start using the Heiken Ashi candles because I think that's a great way to spot new uptrends and downtrends. It's going to be a lagging indicator. It's a few days behind the actual price, but I really don't think there's much of a better way for a macro sort of buyer to know when to start buying into Bitcoin and when to start selling it. If I knew about the Heiken Ashis back here, this would have been your cue to sell because you have two downtrend candles after a trend change candle in a row. And you would have been out, I'm going to say, what's this, in the 50 range? I probably should have had the price set up. But when Bitcoin was $1 trillion asset, you would have been selling your Bitcoin into a downtrend. So very useful indicator. And yeah, we have some other smart contract platforms to talk about. Not that Bitcoin is a smart contract platform. Kind of. People want it to be, but I don't know that it is. Here's Ethereum. Not as pretty of a picture support wise. This is one of my naked charts, but let's just see. I mean, that's like fairly decent support. We could even bring it back here and use that breakout retest of the previous all-time high back here. If we're gonna bounce in crypto, we kind of need to do it now. And that's just a little bit on what I'm seeing in price action across the board. You should be prepared for a bear, but we're kind of at an inflection point. Something we're going to talk about later could be a catalyst for a bottom, but we won't get to that just yet. Let's just look at one of these. This is the one you were referencing earlier, Chris, Avalanche. So tell me a little bit about your position in Avalanche. What do you think about the smart contract platform? You said you think it's relatively cheap to the others, so just tell me a little bit more about that.
My take on Avalanche is exactly that. It is on a relative basis cheap to the other main smart contract players, which are Ethereum and Solana. Bitcoin's just purely a cryptocurrency. Mm-hmm. And I think when you just see what's happening in the growth in that particular play relative to its move, I think we've just got to see a jump at some point.
Yeah, I kind of agree with you. There's a lot of apps being deployed on the Avalanche ecosystem. Same with Solana, which we're going to get to in just a second here. And a lot of people want that next Ethereum, right? Like they want that next Ethereum, and they want the one that's cheap right now. And
Solana was that next Ethereum, and there, in hindsight, were a number of signs that was going to happen. So I think now that we have a script for this, I think it's worth speculating in. Now, of course, everything in the crypto sphere is expensive. It's still expensive, even after months of volatility. I think year over year, Bitcoin is down, but it's still held up. Yeah. So I agree with you on some of these candles. We need to watch them closely. If we see support, I think it's worth jumping into Avalanche here.
Yeah, let's take a peek at the Heiken Ashies on Avalanche real quick, just while we're here. Again, you're getting a lot more combative action in this than you're seeing in the majors, because I think there's a lot of people that, you know, kind of are still in profit on Avalanche, because if we're looking at this in logarithmic scale, up here we're at $70, but down here it's only at like $15. So a lot of buyers down here who are willing to average in at these levels, and even buyers up here are willing to average in at these levels because it's so new and, as you say, relatively undervalued to the other smart contract platforms. So if you're looking for kind of a higher growth, higher risk reward ratio, certainly, but a higher growth prospect, Avalanche, Solana, and even Cosmos, which we're going to talk about right now, these are better plays than something more established like Ethereum and Bitcoin, in my view. So let's just move on to these other ones. Solana looking a little less bullish on these weekly candles than Avalanche, certainly. We have a lot of resistance to catch up to here. Let's see if we can find some support.
Yeah, it looks like it's under all of its main moving averages.
Yeah, and they're all crossing under rather the 50-week moving average, which, I mean, that was born in early 2021. These assets had not been around for very, very long. So we are kind of seeing another inflection point level with Solana here. It could fall a little bit lower to 65, 69. And of course, if you see it fall even further from that level, you probably want to just prepare yourself for another year of bear market or more, which, again, I do think that's a distinct possibility here. It's all about your time perspective, how long you are willing to wait for these profits to bear fruit. Again, Chris and I, well, Chris, you got in on Dogecoin early, and I think that was your biggest crypto win, which is a bit of an anomaly.
Should have gotten earlier, should have sold later. Yeah. But yes, that was the one I made my 6 figs in.
You could say that about so many trades. And when it comes to me, I've just been holding Ethereum since 2016. So it really depends on what kind of investor and trader you are. But I mean, it sounds so obvious, but you know, you're doing a lot better buying at these levels than you were up here back in November. So if you're not in this ecosystem yet, if you're not investing in crypto yet, you're doing a lot better than a lot of people that were buying up at these levels. So this is a time to be dollar cost averaging in. And if we see a new uptrend, again, by looking at the weekly Heiken Ashi candles, then we can prepare ourselves for another.
We're definitely looking at some sort of inflection point here in Solana. So the red line, is that the 9-week EMA.
Yes.
So we're seeing the 50-day regular MA crossing over it, and we're seeing all of those MAs really kind of beginning to consolidate.
Right.
I mean, you can see that there was a very clear channel, and now it looks like we're starting to see some. Just this consolidation makes me think that and we're seeing it in the price as you've gotten the yellow lines here too.
Mm-hmm.
So something's about to happen, and it's probably going to be big one way to the other.
I agree with you. When the price consolidates like this, especially if it doesn't continue dumping past its main supports, and the macro really matters in crypto. The news, the headline risk is severe in crypto. That all starts to line up in the coming weeks and months. We could probably call the bear over. I'm not comfortable saying that just yet. I maintain it's a dollar cost average sort of market right now, if you can afford to. But yeah, watch these averages. Make sure that these shorter term averages don't cross definitively below the longer term average. So if we start to see the opposite of this sort of action, right, where we have the blue and the pink lines kind of crossing and maintaining below the orange line, that's a very bearish trend. And that'll take some time before we see that on the weekly, even if the price continues to dump. But yeah, these are just kind of things you want to look out for. Let's look at Cosmos.
With that said, with the 50-day moving average going up, that is a potential sign for optimism. So that can indicate a trend change. We've got to see it hold up and retest, but
yeah, no, I completely agree. It's the fact that it's starting to plateau off but I mean, Solana grew so fast. I mean,
yeah,
just over a year ago, it was $1.32. It's at $81 now. It was at a high of $250. I mean, this stuff that's why it's coming in so much. It was massively overextended for such a short amount of time. But there is one asset, kind of a quieter smart contract platform that's been doing a lot of stuff in the background, is Cosmos. And you could just see the difference in the moving averages on Cosmos compared to something like Solana. We are so coiled here. I mean, the 9 and the 20 EMAs are just married to each other. They do not want to go apart. And we're seeing very combative price action. So there's no real clear trend one way or the other. Let's see, maybe we can get a clue in the momentum indicators. Not really. It's pretty neutral. We're a little oversold in the MACD, but it's just trending towards zero. So this is kind of an anomaly in the markets right now. It's not making new local lows. It hasn't seen a price around $20 since December. This year, it's just kind of been, flattening out. And I think this is potentially an even better risk reward than Avalanche, just because it's not quite as well known. It also earns you yield on Coinbase. So whenever I go shopping for crypto, I always add a little bit of Cosmos because it yields 5%. So in a world with inflation that's probably going to hang out at 8%, especially with what's going on top of the regular inflation, with the war and commodities and everything, yield wherever you can get it is pretty good. So I just wanted to point out a few more things on the news front before we move on, or rather before we wrap up for today. So something kind of weird happened on this chart. Now, a cool thing about Bitcoin and a lot of their cryptocurrencies is that you can analyze them not just on their price chart, but in terms of what they call their on-chain metrics. So because Bitcoin is pseudonymous, but also every transaction is tracked, we could see things like how many wallets hold over 1,000 Bitcoin. We could see how many wallets own over 1 Bitcoin, and lots of other useful features like this. So something weird happened recently with this. Look at this huge jump. I mean, this is from February 22nd to basically the next day. It's February 2022. That was the 27th of February to the 28th. We had a jump of about 100 wallets that went over 1,000 Bitcoin. This is while the price was tanking. So someone out there in some international cabal of hedge funds, nation states, whoever it may be, we don't know who it is, but we know that about 100 more wallets are now holding a balance over 1,000 Bitcoin than were at the end of February. And that's maintained about a week into March now. So when did this happen? This happened when the Canadian government froze protesters' bank accounts. It happened when they tried to go after people who were sending crypto to the trucker protests. And it happened when Ukraine solicited crypto donations on Twitter, which we're going to get to in just a moment. So it seems to me that some funds out there, whoever may control them, suddenly decided we need to all buy a lot of Bitcoin at once and hold onto it. And again, it's 100 wallets. That doesn't seem like a lot in the grand scheme of the world, but there are only an all-time peak of 2,500-ish wallets that held over 1,000 Bitcoin. And that equates to, at the prices I was originally writing about this, about $43 million worth of Bitcoin. Not a lot of entities are able to take such large positions in Bitcoin at once. So I think you might start to see more corporations announcing Bitcoin on their balance sheets, more nation states like El Salvador announcing that they're holding Bitcoin. And that could be a potential boost and catalyst to the Bitcoin price.
I think this is another just piece of evidence for why you have to be looking at Bitcoin as not just an opportunity for capital appreciation, but also as a hedge against your entire portfolio. I mean, when parts of the world have people scared, people want more privacy, they want more freedoms, and you see Bitcoin going up as a response to that, I think you've got to buy it.
I agree. And you have to think about the macro picture with Bitcoin and what the asset promises. It is a way to transact with anyone in the world without government oversight. That is the plain text pitch of Bitcoin, right? So what also did we see? I mentioned the Canadian trucker protests and Ukraine was accepting donations, which we're going to get to in more detail in a second. But also we saw that Russia was kicked off the SWIFT system. So overnight, Russian citizens they woke up to their currency falling 30%, but also they weren't able to easily transact with or rather banks weren't able to easily transact with the rest of the world anymore. So all those dollars that Russia has been buying up over the years, suddenly they weren't worth as much because they couldn't easily trade in them. And this is causing havoc to everybody in Russia right now. So, I mean, what better? There's no other asset really like it. Gold's not like that because it's physical. You can, put it in your sock and bury it in your backyard, or you can, charter a boat to ship it overseas. But Bitcoin is electronic, and all of this stuff is. So it's kind of a hedge, not just for your portfolio, but it's a hedge against government overreach and being locked out of your bank accounts. And it's a truly global asset. So that alone is important. If you're in a first world country like we are, you have to worry about it if you're in Canada, but so far we don't have to worry about things like that. But a lot of people do. And you can't forget that Bitcoin's a global asset and that these are the kind of protections it affords people.
There's something else that this chart is telling me, in that I don't know if it works in the opposite way, but if you look at first quarter of 2021, when we saw the number of wallets with more than 1,000 Bitcoins drop far below the price, that was a sign of a top.
Yeah.
Now, obviously, we hit a top another 6 months later, but not by very much. So maybe it works in the opposite direction. A big spike like this could be good.
No, I mean, what you tend to see is obviously the Bitcoin wallets with over 1,000 Bitcoin are the whales. They're the smart money. They're the people that can afford such large positions. Let's go back to like 2017, right? So just around this area. So in 2017, you saw the whales selling into May of 2017, and then again into August of 2017. That's when they were
okay. That would have been a terrible sell signal.
Right, exactly. So it's not always perfect, but the smart money, they're working with such large amounts of capital that they're kind of comfortable being early.
But I think after a period of consolidation, if we look at 2018 into 2019, when we saw it beginning to ramp up,
we
saw maybe after a period of consolidation, we're seeing a ramp. It ramp up.
Yeah.
Maybe I'm just grasping at straws here, trying to find any sort of confirmation bias to be optimistic and not sell what remaining crypto I have left.
No, I think there's something to it because you could see them buying into weakness here. So the wallets are basically raising in their balances as the price is selling off. This has been when Bitcoin was at $4,000, and they continued buying and buying. And then we got this second little mini bull market where we got up to 10K and 12K in 2019. Let's just zoom back out real quick. And you can see that it kind of held steady from 2019 through 2020 before we peaked again and we started selling off, which is what we talked about before. So there's a lot of these on-chain metrics you can look at with crypto. This one is one of the ones I find most interesting. You can also see something like transaction volumes, the number of new wallets created, developer activity on GitHub. That's not really on-chain metrics, but it's important for things like the smart contract ecosystem. So a lot of interesting stuff you can look at. Okay. Let's talk about what's going on in Ukraine, and not the whole thing about what's going on in Ukraine, because that's not what this is really about. But the Ukraine government did something a little strange. They basically started accepting crypto donations from people on Twitter. They posted their Bitcoin and Ethereum addresses, and then a lot of people started donating. And I don't have the chart in front of me, but at some point they announced what's called an airdrop. And an airdrop is basically, if you interacted with a smart contract platform, a developer can make it so that that address will automatically be sent some amount of cryptocurrency, whether it's a new one or some other asset that they hold. So they announced that. Donations obviously spiked because people wanted the airdrop of whatever Ukraine was going to send them. And then they decided to cancel it. So I thought that was a little unusual. I don't know if that was just if someone in the know was like, hey, you should announce this because then people are really going to ramp up their donations. But that was fishy. And to be honest, I like that they want to adopt crypto as a means of donation because it's something anyone can easily send directly to the Ukraine government if that's the kind of thing you want to do. But this sort of stuff with airdrops being announced and canceled is kind of why we need regulation in this space. Like I found it incredibly fishy. If you donated because you wanted to get an airdrop from Ukraine, honestly, screw you a little bit because that's just greed and you're not really trying to support the cause so much as you are trying to make money. But in any case, this was just a weird fishy thing, which just shows us kind of how early we are, how much the Wild West all this business is. And just to be careful, don't go donating to random wallets on Twitter. That should be obvious, but maybe it's not for everyone. And then the last thing I want to talk about today. Joe Biden is putting together an executive order on cryptocurrency that he was going to announce in late February, but then some stuff happened and it got delayed. But there is news off the Bloomberg terminal that I was able to find on Twitter where apparently this crypto executive order is coming potentially this week. Now, what will the order involve? It will direct federal agencies to examine regulatory changes, as well as the national security and economic impact of digital assets. And these were unnamed sources. So I don't see what's coming out of the White House as a sweeping ban on crypto, locking people out of their accounts, confiscating it. I don't think this is FDR closing the gold window kind of stuff. At least I hope not. I'm hoping that the White House takes a more measured approach, realizes that this is potentially world-changing technology, and that we foster it. But this is the kind of catalyst I'm talking about. So let's go back to that Bitcoin chart. We're on the regular candlesticks here. Here we are at the bottom of this channel, and technicals and macro do kind of tend to line up in weird ways a lot of the time. And if something comes out of this report that's bullish, or at least not immediately bearish, I think we could really rally off these levels and actually sustain it this time, which would help us out of this nasty bear that we find ourselves in now. So, takeaways for you. Let me stop sharing my screen if I could figure out how to do that.
Actually, before you stop sharing the screen, Mike,
yes, what do you need me to look
at? And could you pull up QQQ,
oh, sure,
the ETF for the technology sector?
Oh, here we go.
So something I've talked about maybe on this channel and other places before is how you have to watch. I think that the stock market and the cryptocurrency market are becoming more and more interrelated. the more mature that cryptocurrencies get. And I think it's why you want to pay attention to the technology index, the NASDAQ, which you can track through QQQ. I think it's also important to pay attention to the Russell 2000, IWM, because the level of speculative interest in the market, well, you're going to see that money go into cryptos and smaller cap stocks. But what we see today in the NASDAQ is we are seeing it trying to hold.
Trying to hold what? Help me out here.
Exactly. It is trying to hold levels that it hit earlier this month. So I think that I think this is just another level of support we're going to want to watch. It looks like on the candle that you're showing me here that maybe we're still in the clear.
I mean, we're not as low as where we opened on February 24th, where we got a huge single day rally that put us basically at the top of where we were the previous session. But we're selling into the close here, and it does not look especially pretty. But I agree with you. Speculative money is going to go towards tech. It's going to go towards small caps, and it's going to go towards crypto. It's just that right now, nobody is looking to speculate. They are all trying to just buy gasoline and all sorts of other commodities and necessities and stuff like that. One last thing.
Friday's chart of the day, you highlighted CNN's Fear and Greed Index, which is basically at a level that over the last 3 years, it has only hit a few times. It's always bounced off that level with the exception of March 2020. I think that that's a pretty obvious exception. So we're in extreme fear levels here, which don't really coincide with how much markets have actually gone down. The actual percentage moves of some of these drops, unless you're Cathie Wood, aren't. Okay, maybe we're basically sitting in bear market territory more or less. 20%. Maybe it is pretty painful. But at the same time, we've seen this before. We saw this in Q4 2018. Markets dropped pretty much exactly 20%. I mean, when you reach levels of extreme fear, there's just nowhere else really for sentiment to go. Now, of course, they can stay in extreme fear for a long time, but you know, the way humans are built, we tend to get pretty exhausted by any sustained emotion. So I think some kind of reversion to the mean in emotion and prices is probably due here, but I'm definitely gonna be watching QQQ, see what it does over the next week, as also just supporting this point about support in Bitcoin and other crypto assets.
Absolutely. One thing we do have to keep in mind is that the Fed is looking to tighten monetary policy into all this mess. I don't know how far they're willing to go with it. That is a distinct difference from the last time we saw a bearish stock market. So we'll see.
I'm reading that like the percentage chance of them doing like more than like a quarter point hike has dropped to, I think, basically nothing.
Yeah.
So we're going to see what they do.
Yeah. One last thing I do want to look at before we go, and we won't spend too much time on it, is Coinbase. So Coinbase
absolutely
killed it on earnings. All right. Their estimate revenue was just shy of 2 billion. They reported 2.5 billion. So even in a bear trend over the last quarter, Coinbase is still making a ton of revenue on people trading crypto, and that's in and out. So this is a company that makes money even in bear trends as people sell their crypto, and they're getting into NFTs. And God, I almost like Coinbase more than I like a lot of cryptocurrency right now.
I know what you mean. I've been buying a little bit more. I don't own a ton of Coinbase. You know, I own a couple $1,000 in it. I probably should buy more because, I mean, you just got to think like I like buying businesses that are growing into a price downtrend.
Yeah, exactly.
Because that means when it goes back up, it's going to go back up twice as hard.
No, I completely agree with you. So if you don't quite have the stomach for crypto itself, but you want the exposure, you know, when Coinbase IPO'd, it basically followed the trend in Bitcoin, and it still sort of is because people haven't sussed out that it's a company. It's not a Bitcoin. But at a certain point, I think that is going to reverse and that you're going to see Coinbase rally despite crypto market conditions. Also, you know, the MACDs and the momentum indicators are looking positive. I even like this for an option trade maybe a few months out. But that's going to wrap it up for Crypto Claptrap. I think it's been a while. Thank you.
It has been a while, and
we've been hiding under our desk.
To talk about, and otherwise, it's just I don't know about you, Mike. I really am not going into my Coinbase account too much these days.
No.
I'm just kind of letting it sit. I own the coins that I want to own long term. I'm thinking about taking a play out of your playbook and just holding some stuff for a long time.
Give it a shot.
Maybe at some point here we can talk about our top 5 holdings that aren't Ethereum and Bitcoin or something like that.
Well, it sounds like fun. Yeah, we should do that in less than 3 months from now.
In less than 3 months from now. Yeah. I think we've just been sort of like putting our head under the covers, under the blankets right now, just sort of like running.
I know we're losing so much money. I can't afford to get a haircut. It's a real mess.
I can't either. But I am growing my hair out intentionally. But if I wasn't, I wouldn't be able to afford it.
All right. Well, thanks so much to everyone watching. Subscribe to the True Options Masters YouTube channel if you haven't already. Subscribe to the True Options Masters e-letter, where you're getting options insights every single day of the week. It's the best options trading newsletter in the world. I don't know if you've heard. I've mentioned that a few times, but you can fact check that. That's absolutely true. And it's going to do it for me. Anything more from you, Chris?
I think that's it. Everybody, stay frosty out there. Don't give up. Don't lose the faith. It's all going to come back. It's going to be amazing.
Yes, it will. And we'll see you next time. Bye, everybody.